Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to do a mortgage rate update. Not only are we going to do a mortgage rate update, so whenever you look at rates, okay, whenever you look at rates, it's very important to know that there is a distinct difference between a rate and an APR. We're going to go ahead and talk about how you actually calculate that. I'm not even going to tell you how I get to this. I'm going to let you know how you could calculate it yourself so you know exactly what you're paying for, because it's actually really simple. And then we could go ahead and go from there. And then number two, well, that actually will be number 3, is since home prices have increased, the cost of buying has increased, mortgage rates have increased, everything is increased, are rental prices going to go down? We're going to go ahead and talk about how that is going to, the housing market affects directly with rental properties. So let's go ahead and get on with the mortgage rate update. As of 8/30/2022, we're going to be pricing out 10 different mortgage products. 30-year fixed will be sitting at 5.38%. 15-year fixed will be sitting at 4.38%. 30-year high balance will be sitting at 5.50%. DSCR, which is debt service covered ratio, and this is a loan product for people who want to get into the investment side of things, where they want to go ahead and take the rental income that they have calculated to go ahead and get approved and qualified for these products. That is going to be sitting at 8.87%. Bank statement loan is another one of those non-qualified, non-agency programs. That'll be sitting at 8.25%. FHA 30-year fixed will be sitting at 4.63%. 7/6 adjustable rate mortgage will be sitting at, excuse me, my apologies, at 5.62%. USDA, which is a zero down payment program, that'll be sitting at 4.87%. VA 30-year fix will be sitting at 4.65%. Hard money fix and flips will be sitting at 9.70%. So that is going to be your mortgage rate update. Now, as you saw in that video, you're going to go ahead and look, either I had the APR on there and I had the rate on there, right? So to calculate exactly how you get the rate versus the APR, the actual cost of buying, it is incredibly easy, okay? So this is what you're gonna go ahead and do. You are gonna first, you're gonna take the total amount that you have, I'm gonna pop it right up here, the total amount that you have in your payments on a yearly basis. Then what you're gonna do is you're gonna go ahead and take the amount that you're paying for on a yearly basis. So let's say your payments are, I don't know, $12,300 a year, right? $12,300 a year on a $200,000 home, right? So you're gonna take that $12,300, you're gonna go ahead and divide by the purchase amount that you went ahead and have. Then you're gonna get a number that's gonna say 0.0615. You're gonna take that decimal point and you're gonna go ahead and get your actual APR. So let's say the face value rate is gonna be at 6%. You're gonna go ahead and divide the total amount that you are paying yearly. So let's say somebody says, okay, your monthly payments are gonna be, I don't know, $1,200 a month, whatever it is, right? Then you go ahead and multiply that by 12. After you multiply that by 12, you're gonna divide it by the total amount that you're financing, and then you get your actual APR. Now that you know exactly how to do that, now you know there's a difference between what the rate is. So we always do a rate update. This is an average rate. But then the APR is the most important part, because the APR is actually what you're going to be paying. So if you are interested in any one of these mortgage products, 50% commission rebate or 0% listing on selling your current home, link in the description below. But now let's get on with, after we got that shameless plug out of the way, now let's go ahead and talk about rents. Is the rents gonna go ahead and decrease? Now, historically what's happened is rents have always been just right below, price per square foot, right below what it would cost, like let's say for you to go out and buy a home. Now, for instance, in Los Angeles and Orange County area, the average medium home price is at $1 million, which is a lot, because you're going into those high balance programs, 3.5% down, 3% down, 100% financing, which a lot of these are available. You can get 100% financing, so don't get that messed up. The only problem is those are usually, you know, piggybacked with another loan, which is a down payment assistance. That down payment assistance will get your cost of purchasing much higher. I mean, you'll get into it. You'll still have PMI, your property mortgage insurance, or your mortgage insurance, or depending on what loan product that you go into. But you are gonna go ahead and pay a premium on getting a zero down payment program. Now, for instance, but if you're in the $1 million range, you are at 20% down, you know, because you have to get into that jumbo range. It's gonna go ahead and cost a lot of money. Now, in Southern California and Los Angeles, rents are averaging between $3,500 a month, which is a lot. Now, what real estate is, especially on the rental side of it, buying a home is actually just hedging your future rental payments, right? Because rental payments historically will go up between 5 and 10% depending on what the market is doing, depending on how long you stay there, depending on your county ordinances, what if you have rent control. A bunch of these different variables happen, but let's just say respectively it goes up 5%, right? 5% over the course of 10 years, it's going to go ahead and be an exorbitant amount of money. So like, let's say you purchase today, right? Purchase today, everything stays the same. Nothing changes. Everything is completely exactly the same. Now, in 10 years from now, your mortgage payment is going to be less than the current market rate that it's going to be as far as renting goes, because rents are going to go up. And then when rent goes up, you have this thing that's called inflation. And everybody and their mother has heard of inflation. Inflation is this little bastard that's biting us all in the ass, which by all means, if you want to stay up to date on what the Fed fund rate is going to go ahead and increase to, because they're saying everything is good, I am curious to see what it's going to be, because we have done historical jumps on that at 0.75, 75 basis points every single time. Now, are we going to go ahead and get to another 75 basis points? They're actually trying to get to 4%. Now, that doesn't mean mortgage rates are going to be 4%. They're going to drop or anything that's going to happen. It's going to go up. The cost of credit is going to go up. Everything is going to start getting expensive. But are rental prices going to go down? Nope. They're not going to go down. You might get a few, it might go down maybe a little bit depending on how the markets go. But historically in a recession time does not mean that rental prices go down. Rental prices stay stagnant or increase, because at the end of the day, everybody's going to need a place to stay. Everybody's going to need some place to live. Homes are still going to be ridiculously expensive. Now, here's the other question. Are home prices going to drop? Now, that is the million-dollar question. I personally, now by all means, I don't know. I don't have a magic ball in front of me. I don't know. But it's one of those things that if you put 2 and 2 together, it's like, what are we really getting at, right? So I'm anticipating that Q2 of next year is going to be when we're going to start seeing a dwindling in prices. We've already seen reduction in prices across the Los Angeles and Orange County, San Francisco area. San Francisco is taking a bunch down. They're reducing prices crazy. Now comes to the fourth part of this. Is there going to be a housing correction, or is this a housing bubble? To understand the difference, a housing correction is going to be anything between 10% decrease in prices versus the previous year. Housing crash is anything over 20% from the previous year. So where are we going to be at? Damn. Seems like it's going to be, I'm just to be speculative, it's probably going to be maybe it's going to be a crash. I don't know. I have no idea. But to stay up to date, go ahead and like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. I really appreciate you watching. Till next video, guys. Peace.